Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Sunday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate the upside-down world we find ourselves in, coming to the other side in greener pastures, hopefully healthier, wealthier, and wiser. We look at the economy, the markets, what they're doing today. We'll take a look at Tim Cook becoming a billionaire, which kind of scratches my craw. And we'll take a look at some Bitcoin news as well. Precious metal and Bitcoin pundits are scuffling again, as they seem to consistently do, which I don't think anyone benefits from. So this will be probably a shorter vlog today. So let's take a look at what's going on in the markets. Here is Forbes. Stock market may be banking on more stimulus. Bond markets don't see it. So we're talking about the stimulus, the executive orders that Trump signed over the weekend. Throughout the back and forth of recent stimulus negotiations, the stock market has retained its general upward trajectory. The stock markets appears. This must interrupt for a minute. Sorry, this article is riddled with errors from Forbes. It's really disappointing. In fact, this is one of my complaints lately. It seems the ability to write well has been eroded consistently as people just try to pump out content for no other reason than to get eyeballs. It seems there's a lack of editorial discretion and insight into much of the articles. You see this a lot in the cryptocurrency space, of course, because that's a nascent space, and so there isn't a ton of money. And I think a lot of the writers that are being paid in the cryptocurrency space are likely English as a second language writers, and I have no problems with that, but you notice that. And of course, what you need is good, strong editorial leadership and hands. But from Forbes, you would expect better. So let me try this paragraph again and try and interpret what the guy's actually trying to say. Throughout the back and forth of recent stimulus negotiations, the stock market has retained its general upward trajectory. The stock market appears optimistic on real stimulus. In stark contrast, the bond market appears far more downbeat. And of course, the bond market as well as the precious metals are really, in my opinion, calling the stock market and the economic recovery BS. And then he's talking about these executive orders are pretty tiny when it compares to the CARES Act that was recently released. And this is what they talk about, these executive orders. So there's a payroll tax deferral in it. Employers may not offer their employees any deferral. Doing so risks having to deduct a large amount from paychecks a few months later, especially if they can be liable for the later taxes if the employee can't pay them. So that obviously would be a concern for many businesses, probably smaller and medium businesses. And then there's the unemployment benefits. The money is coming from other government sources and not new spending. So it thinks that this lessens the impact. I don't think it lessens the impact at all. The money is being spent. If people are being given it, then they will spend it. We've seen that historically. The reason why we've had even the minuscule uptick in spending is primarily because we've had the stimulus payments and the top up in the unemployment benefits. That's really where the money needs to go. I mean, let's get rid of all this stimulus payment into banks and hedge funds and stock market. Let's give the money directly to people so that they can actually buy things that they need. And I think the time for a universal basic income is probably nigh, if not already overdue. Total spending from the executive orders may amount to under $100 billion. He says this is 5 cents on the dollar compared to the CARES Act. It's a different story from stocks and bonds. The bond market doesn't show much optimism. Talking about the stock market's been up since mid-July. Yields in the bond market remain historically low. The yield curve is not showing the aggressive steepening that can be useful in signaling recovery. If there's a major rebound coming, then the bond markets aren't seeing it. And there is no recovery coming. I don't know what Simon Moore is thinking. We're in this for at least probably a handful of years as we sort of dip down and reach the bottom. I don't think we even have hit the bottom of this depression that we're in. That's going to come probably between next spring and next fall would be my guess. As things really start to be unwound, we get past the election, and so folks can actually start focusing on doing some real work in Congress instead of this laissez-faire, hands-off approach that they're taking currently and the theater they're playing with. So this is going to take a while. And I think, getting back to 2019 levels of unemployment and GDP growth probably won't happen much before 2023, 2025 would be my opinion. None of this is, of course, financial advice, just sharing my thoughts. The winter from hell. So, of course, winter's coming, and that's a Game of Thrones quote, and the winter is coming, and in a bad way, because what this brings along is another flu season, as they said here, and another winter and another flu season, along with probably the second wave of the COVID-19 pandemic. Unless Americans use the dwindling weeks between now and the onset of indoor weather to tamp down transmission in the country, the winter will be Dickensingly bleak, public health experts told Stats Helen Branswell. I think November, December, January, February are going to be tough months in this country without a vaccine, said Michael Osterholm of the University of Minnesota. And of course, Americans aren't going to be tamping down on the transmission of this virus. We've seen that clearly. America at large seems to be fine with infecting more people and having the highest death rate of any country, perhaps not death rate, but numbers anyway, of the dying from the COVID-19. And that's a sad, in my opinion, indictment on American culture and capitalism. Everything's, freedom and liberty and me first attitude. Online education isn't the same for adults, let alone elementary students. Studios haven't been filming, and there are dimming prospects for fall college sports. I understand people are getting housebound, a little bit antsy, and honestly, it is stressful, this ongoing erosion, this continued bad news, this ongoing pandemic. It does erode one's mental positivity, for sure. It requires great fortitude to maintain equanimity and calm and a positive outlook, but we need to do that. And here's the rub. No other rich nation has anything close to our level of sustained outbreaks, so no other rich nation will have anything close to our level of misery in the 2020-2021 school year. And all people are looking at is the fact that the economy seems to be doing marginally better, but more importantly, they seem to conflate the economy with the stock market, and that keeps going higher and higher, which means that it's going to be a harder and harder fall when it does react. Again, it will overreact to the downside. I would expect probably by the time this is all said and done, if there is any fairness, which I think eventually just natural laws will require a resettling of accounts, if you will, that the stock markets could lose up to 80% of their value from this point. They'll need to lose probably at least 50% minimum. Europe is reporting a new outbreak, as have nations in Asia, but they have repeatedly done what we haven't, talking about the United States, since the weather warmed up, successfully put the screws on community spread. America is in a horrible place, in a diabolical place, really. It's like Dante's, one of Dante's 7 versions of hell, really. I don't understand how the greatest nation in the world is doing such a poor job of this. I mean, you do understand, really. I say that sort of somewhat exaggeratedly, because America has poor leadership, and that's really where it comes down from. It comes as a top-down problem, and I think this is obviously a sad day, and probably going to be a sad decade for America to see itself decline in the world theater as one of the preeminent leaders historically. But there you have it. On to some Bitcoin news. Peter Schiff, who's a gold bug, doesn't see any value in Bitcoin. Peter Schiff bashes Bitcoin and Grayscale's Drop Gold ad campaign. I haven't seen this ad campaign, so I don't actually know what it's like. But Schiff claimed that since Grayscale Investments ran its original ad campaign telling investors to drop gold and instead invest in Bitcoin, which is seen by some as gold 2.0, or digital gold as I like to think of it, the price of the precious metal went up 60% while the price of Bitcoin dropped 16%. But of course, Peter Schiff is either lying or he's misinformed, as you can see here. Grayscale is about to run another TV ad campaign duping investors into buying Bitcoin. Since Barry Silbert urged investors to drop gold, the price is up 60%. If you did and bought Bitcoin, not only did you miss the gains in gold, but you're down as much as 16% on Bitcoin. Ouch. Of course, Barry Silbert couldn't let that go, so he gave Peter Schiff a bit of a masterclass in math, apparently. Check your math, Peter. TV ad started on May 1st, 2019. Bitcoin was $5,300. Frankly, look at Bitcoin versus gold performance over literally any time frame, and in all cases, Bitcoin is outperformed. By the way, thanks for the continued free advertising. So I don't know if that is exactly correct. We've seen that silver has outperformed Bitcoin year to date. We'll take a look at the market, see how gold is done, but I bet you I could find a month or a quarter perhaps, where gold has outperformed Bitcoin. The fact is it's irrelevant. Both are good assets and stores of value. Bitcoin I prefer. Gold has historically kept its value, not necessarily done well unless you've bought it at a lower price during times of distress like we're in right now. Of course, if you've been in gold anywhere in probably the last 5 years, you've done very well. Another article, beware the hype when investing in gold. The price of gold looks good this year, but the precious metals longer-term track record is mixed. I haven't actually read this article because you have to sign up, and I'm loath to do that. But basically, gold has always done well. It's always been a store of value. Now, of course, if you buy anything at its peak, then it's going to take a long time in order to get back to that level in US dollars, for example, that you bought the gold at. And we can see that on the chart. But if you're a savvy investor or just somebody who appreciates to get a deal, then you're usually looking to buy anything really at a discounted price. And so I'm no longer currently buying silver, as you know, because it's sort of running away from me. If it's a good pullback, I will. However, I think silver is still a fine investment because it's only still at about, I think, half or so. No, it's probably a little over half, but it still has tremendous upside even just to get to its historic heights. Gold, as we know, is already at all-time highs. Tim Cook hits a billionaire status with Apple nearing $2 trillion. The reason I bring this up is because I have a like-dislike relationship with Apple. I think Apple's one of those companies that has to be brought down a peg, along with Amazon, Facebook, Google, and Microsoft probably. But the reason this gets under my craw is because Tim Cook's not a founder of a company, and now he's reached billionaire status. What this suggests to me is the endemic and systemic problem in American capitalism, which is creating this wealth inequality. And now, nothing against Tim Cook personally. He's obviously doing a fine job with Apple, and so he's been rewarded that way, but he's been excessively rewarded in my mind. No non-founder, in my opinion, is worth $1 billion to run a company. I don't care how big that company is. And of course, the way they do it is through stock options primarily, so his salary is maybe only just a few million. And then all these stock options are being granted, and that's how he's making his $1 billion or so. 9 years after Steve Jobs stepped down and thrust Tim Cook to the top of Apple Incorporated, the company is more valuable than ever, and so is Cook. It was valued at about $350 billion when Jobs died. Cook, meantime, has joined one of the most elite clubs for CEOs who didn't actually found the companies they run. His net worth has eclipsed $1 billion. Cook, 59, said in 2015 that he plans to give most of his fortune away and has already gifted millions of dollars worth of Apple's shares. That's good news. He has drawn plaudits for mastering the company's complex supply chain. I had to bring this up because this supply chain of theirs based in China is going to be the ruin of Apple, I think. And perhaps that's an exaggeration, but I think it's going to cause them great pain and problems in the years to come. They've gone all in on China, and I think in the years to come that's going to be seen as a mistake. We're already seeing the difficulties with dealing with China currently, and there's a lot of problems happening in the world right now, which would potentially cause perhaps a Cold War at the very least between the United States and China. So what's going to happen is that these supply chains are going to become more and more difficult to manage. And of course, what Tim Cook is doing, as we've seen historically, is he's bending the knee to China. He's doing a lot of things to appease the Chinese government that he wouldn't get away with in the United States, pulling apps, not allowing the Taiwanese flag on the emoji keyboard, for example, all sorts of little things. Anyway, fact of the matter is nobody's worth $1 billion in my mind just for running a company that they certainly didn't build from scratch. But there you have it. This is an endemic problem with American capitalism. It's showing its cracks. The wealth inequality gap is getting bigger and bigger by the day, probably massively so, and it's going to have consequences. And I look forward to seeing a more fairer and just world eventually, hopefully, once the Great Reset has come and we've turned the corner from this madness. Okay, let's take a look at the markets. Okay, another green day, except for NASDAQ. That'll probably turn green by the end of the day. So everything continues to go on hunky-dory, folks. Nothing to see here. The economy is doing great. Don't worry about those people homeless on the street begging for cash. They just didn't obviously invest their stimulus check in the market. Otherwise, they'd be multimillionaires. And of course, I'm being facetious. This just continues to appall me, frankly, how this is just creating more and more wealth inequality and gaps between people. It's absolutely atrocious. But there you have it. Okay, let's take a look at gold. Now, this is interesting. Gold is taking a big dump today, lately. Still up 27% year to date. But of course, that is quite surprising. Interesting to see. And I'm not sure why that is, but it could just be a pause until it starts taking off again. And we'll probably see silver following suit. It usually has more volatile movements both to the upside and downside. And here we go. As you can see, silver is also down slightly, not as much as gold, interestingly, but it's still above, still around 52% year to date, so it's doing well. And of course, Bitcoin is probably doing quite well as well. Or perhaps maybe Bitcoin is also taking a bit of a breath, a bit of a dump currently. Let's take a look. And as you can see here, no, Bitcoin is not taking a break. It's still at about its all-time high, well, not all-time high, excuse me, but it's year-to-date high, about 1100 or 11,500, depending on which market you're looking at. So that's probably about 11,560 or so. Okay, and onto the coin market generally. Okay, top 100 coins by market capitalization generally down almost 1%, 362 billion, 5879 coins. I think that's up marginally. Wow, some big losses on the board here, interestingly, over the last 24 hours. Bitcoin, Ethereum, XRP all down. Let's see if we can find something that is not down in the last 24 hours. Tezos up quite well, actually, the last 24 hours. Stellar, of course, down as well. Yeah, mostly red. Cosmos taking a big dump, but then it's run up quite substantially, along with VeChain as well. You'd expect that. IOTA is doing well, up 8.7%. Of course, I never chase the high runners, the flyers. I always like to get a bit of value for my investment, and value generally is seen in the price you pay, in my opinion. There you go. Zcash down over 8%. Well, Compound down over 12%, but then it's been on a bit of a rocket ship too, so that's not surprising. Okay, there you have it, folks. Now let's visit the online oracle, the 8-Ball Economist, for today's most pressing question. Okay, so this is just more of a sort of a tea leaf type question. As you remember here, we saw a look at Tim Cook on Bloomberg, that his status is he's a billionaire status as Apple reaches near $2 trillion market cap. So I thought I'd ask the online oracle, the 8-Ball Economist, just for shits and giggles, is Tim Cook worth $1 billion? You know, I don't think so, but we'll see what the 8-Ball says. My reply is no, so I guess we're kindred spirits. As you know, folks, I don't preempt the Magic 8-Ball. In other words, I'm not here behind the scenes doing asking the 8-Ball questions or the same question over and over again until I get the response I want. I do this all live only one time, and if I do it a second time, then you've seen that with me, because usually the 8-Ball will ask me to ask again. So this is all done live. I'm not seeking specific answers, because obviously this is just nonsense. And one of the reasons I use the 8-Ball Economist as my online oracle and trusty sidekick is because I find it just as comprehensive and as relevant as many of these analysts out there on Wall Street. In other words, I think they're all clowns, including the 8-Ball. But the 8-Ball is more fun anyway, and it shows you how you can rely on the 8-Ball as much as you can on any Wall Street analysts, because they're paid by the companies to analyze, of course, so they don't have skin in the game. In fact, they're incentivized to make the case for a bullish case most often for the companies that they represent. And of course, you know that I think there was a study done, or at least a theory, that if you put 1,000 monkeys in a room with typewriters and let them type for 1,000 years or something, you would come up with a verifiable novel. It's the same thing here. You could get a monkey to throw darts at a board and invest in those stocks, and you would probably do as well as any of the analysts have and their recommendations. So anyway, this is just to give you a sense that, you know, we have to take ownership of our own responsibilities and our own choices. That's enough for today. So we're heading into midweek. Not much on the agenda right now. Things are still quiet. We've seen the earnings coming up. So in the meantime, folks, let's hunker down and pay off more debt, put away more savings, so that we can prosper on the other side of this debacle once it's well behind us in the rearview mirror. In the meantime, take care of yourself, be kind out there, and remember, dum spiro, spero.